What does the rise in bond yields mean for stocks? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Tommy Thornton, founder of Hedge Fund Telemetry. Hey, Tommy.
Hey, I just found out my YouTube is just launched on that monitor.
You're like, wait,
So when you get those notifications, sign up for the notification. I did, and boom, I'm
you're hearing
echoing.
you're hearing echo. Yeah. Well, we can't hear it, but if you want to take a minute and turn it off, I will just say
No, we're
that
good.
you're good. Okay. I know Tommy's used to work in a million screens at once because he usually is trading and probably will be trading while we're having this conversation. So it's like the master of
Yeah,
multitasking.
I know you got me on like a couple days where I have positions that are earnings, and so we'll see what happens. I may have to say, oh, ooh, and
Yeah, you do that,
slip
and
my
I'll
wrist if I'm wrong.
yeah,
But
you do that if you have to take a trade, you do that, and I'll talk to the good folks in the chat because it's always good to see them.
no,
Well,
we're fine. I mean, I can figure things out. I don't know if nothing's too big that it's going to cause any pain.
okay,
So
good. That's good to know. Well, listen, it's great to have you on during this busy time because we do have earnings coming out fast and furious, but we had a down day for U.S. stocks. NASDAQ was off well over 1.75%, Dow and S&P off 1%. And the focus really seems to be on yields. The 10-year Treasury briefly back above 425. This has been a big move for bonds. What are you thinking about as you see this dynamic?
well, thank you for having me on. By the way, thank you, and everyone hit the subscribe button on this for Maggie and like. That I'm asking a lot there for me, but as you see, I'm moving offices, so if it looks like
Someone robbed you.
yeah, somebody has. Anyway, the backup in yields is really interesting, and I think the bond market is telling the Fed, we think you got it wrong, and we've heard a lot from Stan Druckenmiller, Paul Jones, and people are starting to be leery of the Fed and doing 50 basis points, and if inflation is going to come back. And that's kind of been the whole thing that people are concerned about and watching in the markets. And, everybody thought, oh, the Fed's going to cut rates, and then all of a sudden things are going to be good, and the housing market's going to take off, and it's going to help commercial real estate. And that would be so great. But, those rates are, the Treasury rates are what they are based off of, and it's not the Fed funds rate. And so maybe the Fed just wasted it. And if inflation starts to come back, then we got, an even bigger problem. Okay, so I'm looking at Tesla. It looks like they beat on EPS on some fake number, and then they missed on revenues. Stock's trading up, and I'm still profitable. But anyway, I'm probably going to add more, but I'll tell you when.
For those of you who don't know, and I think most of you do, because most of you follow Tommy and or subscribe to his research at Hedge Fund Telemetry, which is on sale right now. There's a big discount.
Yeah, we have a discount. You saw it on our Twitter. 500 off our annual rate, which is 50% off. So use the code 500 in checkout and get a fabulous deal. Hopefully we can do a little better this next year than we did this last year. Because
Listen, these are really
NVIDIA. Oh my God.
You didn't buy NVIDIA. Well, if you didn't buy NVIDIA, Stan Druckenmiller sold his too early, he says. So, this has been a kind of a befuddling one. But if you do follow Tommy and his research, he has strong opinions about Tesla. He's brave enough to talk about it on X, which is incredible because it gets a lot of attention. And you're sort of like a perma bear on Tesla, I would say, right, Tommy? So you had shorts on for
Tesla? I'm a skeptic of. I mean, first of all, the company's an $800 billion market cap, and that's if you take Ford and GM, who sell a lot more cars, and combine them and then times that by 10, that's your market cap of Tesla. And I just think that it's one of those companies that that has captured the imagination of stock traders and people that are excited about the future. And I don't think that they're going to have the full self-driving anytime soon. I don't think they're going to have a robo-taxi anytime soon. Um, I find it possible that they may never as well. And their earnings have continued to decrease. So it's
This is a hard
you know,
stock to trade on the fundamentals, though,
oh,
isn't
the
it?
fundamentals are ridiculous. It's ridiculous, and momentum and everything like that. So I sold some here. Okay,
Yeah,
I'm
so you
doing that.
covered your shorts, right?
I had a little. I had a pretty big size short. I covered a little earlier, and just with the plan of laying it out a little higher. So we'll see where I'm gonna start adding it back. But no big, it's nothing big. And I always preach to people, maintain your sizing properly. Don't get too big where it's going to change your life if you're wrong. It's better to be patient and make money slower. And that's kind of what I do, and that's so out of vogue these days. So anyway, the thing. Let's go back to bonds. I think rates could go a little higher, and I think that it's a protest by the bond market because the candidates are voicing plans to spend like crazy. Give people more tax cuts. There's really just no end to it, and I'm really sort of one of those types that wish the government would start being a little bit more responsible with the money that we have. But that's hopeless at this point. They're buying votes with tax cuts, and the national debt was, I think, I'm just going to spitball, like 15 trillion when Trump got in. It's now, oh no, maybe like 20. Now it's like 35 trillion, and the next president in 2028, that'll be $50 trillion. And that, if we have a debt to GDP is still very, very high. If we have a change of GDP, like a recession, which God forbid, I know they're outlawed, then it gets even worse. So we have the highest deficit, and both parties are responsible. Democrats and Republicans, they both are responsible. Oh, I don't care. Leave your comments I don't really care. I just think that as Americans, we should have greater accountability for what these people are doing with our money.
Well, listen, I mean, this is implications for Congress as right? Like, because in reality, the president just sets the tone. It's Congress that passes all.
The president sets the tone. It's the president's party that does, so much. And it's just one of those things where you just look at it and go, it makes no sense. And so I understand.
So what do you think when you're talking about yields going higher? Because I've heard this, so many people who come on, Tommy, talk about this. Like, there's a lot of concern about what's happening, about this becoming a real threat to the system, to the sort of functioning of financial systems. People are really getting concerned about this. But if I feel like there's a little bit of a sort of Chicken Little aspect to that, because we've been having people complain about the deficit, I think, since I started reporting on business.
Yeah,
it's not that I don't believe it, but do you feel like now we're actually going to start to see the bond market, the sort of the Fed and maybe the government lose control of the bond market, and the bond market really start to deliver a message? Does it feel like something's different?
It could be. I'm not sure if we're going to have a Liz Truss moment where everything really freaks out. Possible. I mean, anything is possible these days. I think the bond market is recognizing the fiscal policies have limits, and I can tell you, maybe I'm just being totally naive, and in 5 years I'll say the same thing. But it's just I think the bond market is bigger, and they're telling the Fed, I think you got this wrong. And if inflation comes back, then what? What's the Fed going to do? And that's been a precedent in the past where you see these double spikes in inflation. And I'm not saying it's going to be an inflation spike like what we had before. It's possible. Anything is possible in that regard. But I think inflation could stay sticky. And you have some of the politicians that are saying, oh, we want to increase minimum wages. We want to, that's inflationary. Cutting taxes on certain things, inflationary. Tariffs are inflationary. So there's all these things that add up. A stock market at all-time highs, that's inflationary. So I just don't see prices going down unless we have like some severe recession. Now I watch your channel, and I watched Kevin the other day, and he said bonds are the worst investment. I watched David Rosenberg yesterday, and he's like mea culpa on, he's a bond bull, but upset. I think everybody, in the sense that they can have that trade right. It depends on the timing aspect of it. My view is that bonds are a trading vehicle, and thus that's what we do. We'll trade them. I don't necessarily think I want to go out and buy a 30-year bond for the duration of it, but I think that's what people are doing now. They buy bonds reflecting a lot of like Paul Jones and Stan Druckenmiller are saying we'll buy the long end of or we're shorting long into the curve because there's more issuance.
Yeah,
that's kind of how I see it. But I think there's going to be, so my short term, there's going to be a little bit more backup in yields, a pullback, possibly on like the equity markets freaking out, and then rates will go higher as the new president is announced in December.
So it's right. Yeah, exactly. We're laughing, right? Because election day is very early November. And so you think maybe we're not going to know right away?
I just am going off of precedent with certain people. And I think both sides are going to probably be crying, foul on certain things. It's just.
What do you think, Tommy? Kevin brought up a good, by the way, these interviews we're referencing, you can see them all, of course, on the YouTube channel if you haven't had a time to watch it yet, because we dropped David yesterday, and you can find summaries on Substack if you want to do that first, and then you can click through to the interview there if you want to kind of get a crib on it. But Kevin had an interesting comment, I thought, which is that everyone seems so convinced that we're going to have either a Trump victory or it be really close, and maybe we don't know right away, that he didn't think enough people were taking out any insurance for the idea that there would be a blue sweep, right? That maybe there's a bigger than expected margin. And he wasn't saying it was going to happen, but he was just suggesting, like, why wouldn't you take out insurance on that? And he had some great charts about the dislocation that happened in markets following the sort of first surprise Trump win. It seems like very hard to handicap what's going to happen. And yet prior to today, we had just the equity market flying. Does it seem like people are a little too complacent going into this and think they can game out what's going to happen? How are you thinking about how to trade through the volatility?
So actually, this is good because now I'm back on track with my thinking. I thought about this a lot over the weekend, and I thought about, talking to you about it. I wrote about it on my note on Sunday. I like to look at technicals go back and look at what a technical indicator was doing at a certain time, at an important moment, the earnings report or something. And let's go back to 2016. And I look at charts on just about everything, economic data. I look at charts on polling for presidential candidates. And back in 2016, when I was just starting to do my own business, I wrote a letter saying, my charts looking at the thing, you're not going to believe this, but I think Trump could win. And, I got people, yeah, right. And now I went back and I looked at the setup from 2016 to now. And I look at market sentiment. Market sentiment between 0 and 100. Towards 100, it's very overbought, bullish. Everybody's bullish. It's down lower, everybody's bearish. At the election, S&P bullish sentiment was at 10% bulls, and it just hit 80% bulls 2 days ago. So you have a difference there. And then I look at DeMark indicators, and there was a sell signal in the S&P back in July of 2016, and then moved down, and you had a move to the 200-day moving average in the S&P. So you had the markets already trending lower into the earnings, and you had a DeMarc buy 19, set up 19. The Dow had a sequential buy 13, like 3 days before the election. And that was like really sort of interesting to me, because I thought, wow, there's the potential for the market to bounce. And if you go back and you do the YouTube thing and you look at like what the news people were saying overnight with the election, it was such a surprise. And the Dow futures are down 800 points. It's like, what does that mean? 800 points. So, and everything came back. So there was like a big surprise with Trump winning in 2016. And now it seems like it's kind of like, okay, well, it sounds like he just may win. We kind of know what to expect with Trump this time. And the other time, the news people were thinking, he's going to push the button and nuke, Iran or whatever. They were so freaked out. Now it's just they're annoyed by Trump. That's how I see it. And I think that the market's priced in a lot of the Trump trades. You've got a lot of, we're going to deregulate. Mergers are going to go through. So the financials have done well. I just don't think that's necessarily sustainable at these levels. They're not cheap. I mean, the market's not cheap right now. We have to just sort of be aware of that. It was cheaper when Trump got in. And there was also, you had the tax cut. That was the carrot in front of the market back then. And when the market, realized that, Trump's going to give a massive tax cut to everybody, they priced that in. They're not going to do a massive tax cut this time. They're going to extend it probably. Paul Jones thought that was sort of like the wrong thing to do, but I get it. I know people like tax cuts and that are voting for them, and that's we want more tax cuts. There's a trade-off there in many respects, but which you're either it's black or white or red or blue in this world. There's no really in between, which I think is sort of underrated.
Yeah, we haven't had realistic conversations about much policy in the
Yeah,
last few years.
yeah.
I have a question from RV, because I think this is also tied in, or give us your thoughts whether it is. Tommy, what's going on with the dollar? Why is it so strong?
Yeah, it's the same trade as essentially the same trade as rates moving higher. You had the carry trade blow up. I thought the yen would strengthen a bit more after wiggling after the August scare, but it's really just been in some regards, when you have this strong dollar, it's sort of a risk off type of trade. So maybe this is the fear trade that people are reflecting right now with the uncertainty of the election. I think that's possibly it. Again, it looks very similar to rates, and I think that the dollar could go a little higher. Going back to market sentiment, the dollar bullish sentiment not too long ago at the lows was 13%. That was like a 2024 and 23 low in sentiment. Now it's around 75%. So it's moved up a lot, but I still think it could go a little bit more. And that is confounding. It's also confounding that gold is supposed to be the hedge against the weak dollar, and the dollar's going up and gold keeps going up. And my view on gold, I don't have any gold. I don't really care if I'm missing the gold trade, because it seems like it'll come back to earth. But I've been telling people that has had market sentiment just level off pretty high. It's sentiment is not necessarily a trigger. It's more of a condition, and it's just stayed overbought for a while. And I said, unless it breaks 60% on sentiment, then you really just have to sit there. And it's had exhaustion signals, the DeMarc signals, but those just pause the buying and nominal pullbacks. All right, next question,
Okay.
please.
So what do you like here? Because if I'm hearing you right, and I think this is the sentiment from a lot of people, you have to be really nimble because there's some short-term
Oh,
things
yeah.
people are looking at, but then there's this longer, this is slightly bigger, even if you're looking out just into the beginning of 25. It's kind of, there are two different things that you have to hold in your mind. But what do you like here? Because I know you trade a lot of individual names. You just mentioned that, and by the way, Lena, reminding everyone, because you're always very humble about it, that you were up 59% your first year. But you mentioned that you weren't in NVIDIA this year, which hurt
No,
you.
my performance has been so bad. No, I'm not in NVIDIA. Here's a fun little tip. I ran this on the 18th. This is the S&P 500. Come on down to the stage here, little chart. So on the 18th last Friday, the S&P was up 1.88%. Okay. And NVIDIA contributed 16 and a half points, which on 39 points, the index was up, which was 43% of the index. The next best gainer was JP Morgan, which was 4.8% of the index. So that's 10 times more basically NVIDIA leading. But I'm giving the bullish people credit here. 331 stocks were up and 172 were down. That was Friday. Now I ran it this morning. Okay, you come down. NVIDIA is 18 points out of 25 S&P positive points. Okay, and that's 70% of the gain. That's 10 times more than JP Morgan. Now it's 7%. So, I get it. NVIDIA's done great. I mean, you have semiconductors like Lam Research down on the year, AMD barely up on the year, Intel, I mean, is a freaking disaster. Has a capital liquidity problem. It's been one stock, and that's basically it.
Yeah, look, I
And
think you're speaking to the difficulty when you're actually managing money is if you can see the fundamental reasons why that doesn't make sense or is dangerous, but you're not
it's
holding it. This is everyone is either afraid to get out or get sucked in for this reason because then
yeah.
you're
I mean,
underperforming.
I don't really look back and go, I woulda, coulda, shoulda. That's just not in my
So how are
DNA.
you thinking about stocks moving forward, like your
Well,
equity? How are you approaching it?
I think there comes a point in every growth story where growth starts to slow. It just happens. It also comes to a place where you look at the valuation, and NVIDIA trades at what 30 to 40 to 50 times earnings. The price to sales are completely up there in crazy town. But the company's got like momentum. They're the only one in the only game in town, and everybody has to have their new greatest and latest chip. The guy's on TV all the time talking. Until it slows, that's it. But it's not going to go up 180% next year. I mean, maybe it will. I mean, if it does, it's probably going to be another great year. But it gets to a point, and this is the concern I have, and I think it's sort of it underscores things like the tech bubble that when it burst. This is so much worse because the market cap of NVIDIA, each point is $25 billion in movement. And so it moved it was like 3 points, 4 points. That's like almost their entire 2025 revenue guidance is what they're moving intraday. So it just gets to a point where it gets a little nuts. But until that, that growth starts to slow, and it could be a data center company, it could be, Alphabet could say, we're slowing a bit on our spending right now. Boom, done. Meta, we're gonna, we think we're getting close to, finishing. Boom, done. That's gonna be what happens. Now, I usually don't come on and talk about what's happening today. I usually talk about stuff that goes on. Like I've been on your show for a long time. Like the beginning of the year, I remember these people on the comment section. They were like, I can't believe this guy's buying Chinese internet stocks. And I stayed true to it. I said, these are trading cheap. I mean, Alibaba was trading at 8 times earnings. It's still cheap. and I just, it went nuts on the upside, and everybody jammed into it. I took profits on most of mine, and it was up 50%, and it's backed off. I'm starting to buy it back again. I still like it, but I try to find things that are going to happen out there in the future. Like I've talked to one about Pure Cycle Technologies. They make recycled plastic. It's a little hairy, the fundamental case, and it's a new technology, but there's 37 days to cover. There's so many people short the stock, and they're actually producing pellets, and it sounds like it's coming together. So there's that.
Somebody asked me about Recor systems.
Oh,
they must know you. Is that why they're asking?
Yeah, it's I look, I have a couple small cap names. This is one that just can't get out of its own way on the downside, and I still believe in it. They make cameras and AI cameras for traffic, and if they ever can pull it together, I think the stock, trades at one-time sales. I think it'll work. It's just a mess right now. But I don't mind saying.
Mitch just called those her dumpster dives, which I loved. It's like, those are your ones. If you have risk tolerance, maybe you want to take a punt. Listen, I think you just really gave such a great overview of the challenge of this market now, and it's real FOMO, right? It's like everyone's in NVIDIA. If you haven't, you're underperforming, but you are sticking with your framework of trying to find places where you just see more opportunity with less risk. I mean, it sounds like you think NVIDIA is kind of a little bit of a time bomb.
I'm not using those words, but it's actually a good word. I don't know. I just look at it. I'm trying to find things that can work with outside of the market, and I've had really pretty good success with most of them on the long side, and the ones that I've been really thinking catalyst driven. But it's hard being short some of these things right now until things really start to wiggle down, and I think we're starting to get that. I think things are starting to get a little dicey. Like I have Tesla, I'm short, it's going up, but I'm also short IBM, and it's going down. So I'm, it's being a long short investor is sort of manic depressive. You have the goods and the bad, the good and the bad, and sometimes you just have to pick the fruit when you get it, and that's what happens. But I have to go through the whole Tesla thing, and it's they beat numbers, but
well, there are a lot of people who understand the difficulty of what you're doing, especially when you're actively managing. And Ched said, I like Tommy's humility. Important to hear folks who are intellectually honest. And Christopher said, Tommy's a real pro. Most are charlatans. So you have people who appreciate the work you're doing and the fact that you're so honest about it, Tommy, because everyone else just makes it seem like it's shooting fish in a barrel and it's super easy and people get sucked into that. And it's not. You have to really think about risk.
Yeah. I mean, there are a lot of people out there that are on TV and they're in Twitter, and I've kind of backed away from doing a lot of media stuff, and I'm on Bloomberg and such at times, but like I'm not on Twitter as much as I used to. It's kind of like, what's the point? I just don't find it to be that informative. I don't watch a lot of other people these days. There's so many people that just tell you what's been happening today. I lived it. I don't need to know what happened today. And I'm really more focused on, staying focused on a process that I think works, and waiting for opportunities. And like, I'm really good in these types of markets. When you have this market, I mean, it's difficult, and it's hard for most active managers, to be quite honest, in those markets, because they can't overweight NVIDIA. And if they're overweight NVIDIA, they have AMD, and that's underperforming. And then you have, other things. And it's just like, it's not easy. And, that's why, experience is really important. I hope people learn from what happens to them in their process building in the markets. And, me talking, or Kevin Muir talking, or David Rosenberg, those are like important, because David was saying, yeah, I've been wrong, and he felt bad about how it feels. And I feel horrible when I'm wrong. I don't necessarily, when I'm right, feel like, this elation.
Yeah.
I just try to keep it just chill. I mean, I hate being, I hate losing. I mean, it's like if the Dodgers lose to the Yankees, I'm going to be pissed. But Tesla's up in
I
my
can't
face
say I agree with
after
you
hours.
on that, but
I've got IBM working. It's like I'm not gonna, try not to freak out
yeah.
when things go. It's also because I'm fairly patient. I diversify, and I'm never going to be in anything that's going to cause, imminent failure. I'm not, my portfolio is not, 150% zero dated, options in one stock like people do.
Yeah, no, I
And
know. It's a lot of crazy, which is why it's so beneficial to have these conversations, because you have to have a framework. You have to work off of that, and you have to stay true to that, not get sucked up into the moment, because that's usually when people, make the mistakes that are so costly. So, Tommy, you seem sort of concerned to me, and I know that we've had a lot of big names talking about that, because you mentioned Stan and Paul Tudor Jones, and there seems to be a lot of worry out there. Warren
charlatans like
Buffett's
those guys.
Yeah,
Yeah.
Warren Buffett's got a lot of cash right now. What are you going to be watching? Where are you most concerned? Where would we see the cracks if something were to start feeling like is the bond market hold the key here? Is that what?
Yeah, it could. I mean, there's been many times that the equity markets take a pretty sizable hit when the bond markets start to sell off. It's when the bond markets start to sell off rapidly, essentially just position, people are getting buried in their positions. One of the things that's sort of nice for them, a lot of banks and such, is you don't have to mark to market anymore, which is the dumbest thing in the entire world. But still, if you were marked to market on things, I think people would be a lot more panicked. But if the bond market starts to fail and you see rates move higher, happened recently in England, the Liz Truss moment, excuse me, I'm dying. I have this life jacket on too. I'm like really prepared,
You're moving.
But,
You're ready to evacuate the place at any
I'm
moment.
ready. I'm moving offices. I'm stocking up on
It is like
water,
a metaphor for how you feel about the
tuna.
market.
I'm stocking up on rations. But I think that right now, that's kind of what I'm watching. If rates start to become unruly, it could start to affect the equity markets. And a lot of people say, well, it shouldn't really affect the equity markets because of, these tech companies are sort of a hedge against that. And maybe they are. But I think all good things come to an end. When it comes to growth, there's cyclicality to things. That's what I see happening with tech.
Awesome. Tommy, it was so great to catch up with you. I always
Yeah.
like hearing your thoughts and your experience and honesty. Really mean a lot as people are trying to make their way. Listen, we haven't seen this kind of volatility in bonds in a long time. There's a lot of things happening that, maybe rhyme with history, but we certainly haven't seen. So it's really good to sort of hang on to some fundamentals of how you approach these things. So we appreciate
Yeah, I think right now, my thoughts I'm telling a lot of people is I think we're kind of late cycle on what's happening in the world right now. I think it's important to just sort of live within your means, stay conservative. And it's usually when you want to stay the most conservative when people are trading and acting very aggressive in their own ways. And you see it out there. People see their friends, buying options and trading, crypto stuff, and diversify. Don't be afraid. If you've got good profits this year, take a little off, save some. Cash pays a return these days, so it's not that bad. And I really think that like right now, could get a little dicey with this election. If you go back to 2000, the equity markets only dropped 30% around the election with earnings, and that was only 30%. If 30% Nasdaq 100 drop happened today, I don't know what people would do. I think they would just absolutely have a coronary, and there'd be pouncing on the Fed's doors to cut rates, QE, do whatever. But that actually happened. So we just have to know that things could get slippery and dicey pretty quick.
Yeah, and every year it just seems like more and more of us are exposed to equities because we have to kind of manage our own retirement. So we have to really be careful of that from a sentiment point of view. Well, listen,
Well,
Tommy,
you can
good luck.
also go to cash, Maggie.
Yeah,
You can also just ride it out and say, I'm taking a possibly rough period off. I
yeah,
mean, you don't, if it's in your retirement account, it's not like you're taking capital gains.
yeah.
I
No,
I
that's
tell people that
absolutely
all the
true.
time.
Yeah,
You can, oh, but it's gonna be hard to get back in. Well, you'll have me on, and you'll when things go down, and I'm gonna say, yeah, now you can get back in your retirement account. But
all
I
right.
think it's just you got to be very careful right now.
We're
Could
gonna
get
hold you to that,
nuts.
Tommy. You can ring the bell for us when we need to get back in because I think there's some people thinking about that. And Christopher just had a great quote in the chat. By the way, there are people from Europe here. Hi. I don't know. It's Wednesday. I hope you're in the pub, maybe. He said, Confucius said, when prosperity comes, don't spend it all at once. So yeah,
Yeah, good
sounds like that's good advice all around. Um,
philosophers.
yeah, we got some philosophers. We do in this community. It's fantastic. Someone's asking about now. I'm not going to ask you about this. I'm just commenting to them. They're asking about nat gas in relation to, I think, data centers. Alan, if you haven't had a chance to look at the interview with Doomberg, it's on our YouTube channel. Check that out. He really has been looking deep into that, or go to his Substacks. He's been doing a lot of work on the connection with nat gas and AI. So you're right. It is a talking point. Tommy, good luck with the move, the office move.
Thanks.
Hope it
You
all
want to
goes well.
come by and, if anybody wants to come by and help move, I've got some cabinets. They're very heavy.
That
Um,
we can see behind you. I'm sure you're gonna get your inbox full of volunteers because everybody shows up when people ask for help moving. You know how that goes.
it's so good.
But very seriously, thanks so much. It was great to catch up with you. Thanks for the great chat, everybody. We will see you again on Friday. In the meantime, take care and good luck out there.